Welcome back to the Forex Lounge Fundamental Extras. Today is Thursday, May 6, 2010. Welcome back, one and all. Great you could join us. Bloomberg.com reports today New Zealand's unemployment rate unexpectedly fell the most since at least 1986, signaling an economic rebound the central bank said may prompt an interest rate increase over coming months. The currency surged. The jobless rate plunged to a seasonally adjusted 6% last quarter from a revised 7.1% in the previous 3 months, the Statistics Bureau said today. Less than an hour earlier, Reserve Bank Governor Alan Bullard said in a speech that the economy was in a less fragile state. Getting to the charts now, the blue line represents the New Zealand unemployment release on a quarterly basis, again dropping down to the 6% after reaching historic highs at 7.1%. The violet line represents the 12-month moving average of this quarterly New Zealand unemployment figure. Now, what's remarkable to note is that we've now crossed below this 12-month moving average for the first time. We're going back all the way down to January 2008, and this certainly is encouraging, a sign that as unemployment falls, the economy is strengthening. Now, compare the New Zealand unemployment rate, that's the violet line, to the RBNZ, the Reserve Bank of New Zealand interest rate history. Historically, over time, as unemployment rises, as less of us are working, the Reserve Bank of New Zealand will lower interest rates. However, during strong economic periods, as unemployment rises, I should say, the RBNZ cuts rates. However, historically, over time, as unemployment falls, the Reserve Bank of New Zealand will raise rates in light of a stronger economy. And we can see this over the past couple of years, 2006, 2007. Certainly good indications for the future. Now, compare New Zealand unemployment, that's the violet line, with the NZGI, the New Zealand Gross Index. That's an equity market. That's a stock market. Historically, as unemployment falls, stock market tends to do well. As unemployment rises, stock market sells off. Lately, the stock markets have been very strong. Unemployment continues to fall, which has a strong negative or opposite correlation with each other. Now compare New Zealand unemployment, that's the violet line, to the Kiwi dollar currency pair. Now we always have to say that it's not a perfectly fair comparison because there are two currencies within a pair, the Kiwi and the dollar. However, historically, during times of unemployment is high, the Kiwi dollar goes down. When unemployment falls, the Kiwi dollar rises. Lately, the Kiwi dollar has been very strong. New Zealand unemployment has begun to fall, which shows the correlation is still intact. And we can also compare the Kiwi dollar, that's the violet line, to the NZGI, New Zealand Gross Index. Very strong positive correlation. As the Kiwi dollar goes up, so does the equity market in New Zealand. As the Kiwi dollar falls, so does the equity market in New Zealand. So unemployment falling to 6%, crossing below its own 12-month moving average on a quarter-to-quarter basis. It's encouraging to see that the economic situation in New Zealand is improving, and we would likely expect the Kiwi dollar and the NZGI Gross New Zealand Index to continue to rally as well. We hope this has been helpful. If you have any questions, email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.